Well, first of all, I was part of that video game generation, so I understand the concept of hitting the reset button and starting that game all over again. But yeah, you could have pulled a Rip Van Winkle and been asleep for the first 9.5 months. You're back down to flat at this point here. If you take a look at the S&P 500 chart, so far, just on a year-to-date basis, the idea that we could be where we are right now, right, and have it be the same level that we were to start the year off is something that a lot of people didn't really count on, but certainly something that we've seen in terms of kind of following that trend higher in the last 6 or 9 months and then having it fall off sharply like we have. The S&P 500 has been interesting in the terms of the movements that we've seen within the sectors, and yesterday's price action kind of echoed some of that. Take a look at because the utility spider, this particular ETF that, again, tracks the utility sector, was one of the ones that outperformed in yesterday's trade, a defensive trade that we've seen play out in the past, something that shows risk aversion. Elsewhere in the market, you're looking at some of the places where we have seen some of the biggest declines overall. If you look at those, we're talking about technology, no surprise there. Mike just mentioned the semiconductor space. Communication services, those were the underperformers in yesterday's trade. There's going to be key because we've got the likes of Twitter, Alphabet, all of these other technology / consumer discretionary / communication services stocks reporting earnings today. That's going to be one to watch. And then, of course, with regard to volatility, when we talk about the VIX, we do talk about this idea that there's a move there that maybe shows some kind of panic. We are now, at one point yesterday, got to the same levels that we saw during the more peakish parts of the sell-off earlier on in the last couple of weeks, but certainly a far cry from where we were back earlier in this year when the VIX on an intraday basis topped above 50. So, Joe, this idea, Becky and Mike, that we are near these peak levels of volatility, I mean, we've seen worse in the past. We'll see if this kind of relief rally today kind of takes this at least a little bit from those elevated levels that we've seen the last couple of days, guys.
Yeah, I checked the highs and lows on the VIX again yesterday.
Yeah.
Kramer's declared that 2475 is close enough. He was looking for 25 at some point, but it never really did hit. There was never a 25
right.
print.
Right,
Nope.
and we're at 2317 right now. This idea that we haven't kind of hit this area of 25, but we're hovering. It's good enough right now for government work. We'll see if it sticks that way.
Given the NASDAQ yesterday, I expected to have seen above 25. And
4.5%. That's bad in one day. That's pretty bad.